But what were some of the opportunities that you saw that signaled that this is what we should be doing, even starting from Sycamore, from financial services space? Because you could have come out of LBS and chosen any business.
I'm going to get a job.
Right.
So I think one of the signals was the space was just blossoming, maybe not maturing, but just blossoming. A lot of players. We have over 300 digital players in financial, just lenders. They're not banks. Do you know what I mean? So there are it's a highly fragmented market.
So what do you think about the hospitality sector in Nigeria?
Because of how the shortlets, industry started, people started it as a side business. Oh, I have this apartment. Okay, let's just do an Airbnb, right? What the trend is showing now is that people are moving or preferring success in this industry looks more like services in shortlets. So companies that are more organized around their services, verified apartments, these are what most people are now trending towards. You see investors actually investing in whole buildings that are run by a company, not just an individual.
Hello everyone, and welcome to another episode of Industry by Mustard Insights, where we take a deep dive into some of the industries under our radar. So to do this, we're going to be having a conversation with the CEO of Bedrock Residences Limited and Sycamore Group, Onyinye Okonji. Pleased to have you here today.
Same here. Thank you for having me.
Awesome. So we start the show with a data question, and because it's two industries, we're just going to look at population. So population of Nigeria, currently around, say, 250 million, we're projected to be 400 million by year 2050. Mm-hmm. So what does this number say for both the financial services space and hospitality?
Okay, that's a fantastic question. So for financial services, right now the trend is going towards capitalization and solidifying like fortress banks, right? So in 2050, when one in every person in the world will be a Nigerian, not just an African, we want to be able to deepen financial services and what that looks like. Because, recently we've been having a shift towards more tech adoption, right? People are credit tech, lend tech, insure tech, all of these things in financial services, right? So we want to be able to dumb it down, right? But also make sure that it is capturing a lot more people. That way, that's when we make money in the industry, right? For hospitality, with those numbers, I'm thinking about affordability. Right. I'm thinking about how many of those people live in the urban areas, in fact. Because what we're doing is actually just doing modern spaces in the urban areas. So I'm thinking about the capture of people that will be in the urban areas, which will not be a lot, because how many people can Lagos really hold? Yeah. And then I'm thinking about what's in their pockets. How many of them can actually pay the entry fee to come into a hotel or into a shortlet apartment, right? So those numbers, when you lift the hood, it's not really anything outside if you don't create the amenities that make people's lives better. So for hospitality in general, I think that yes, it becomes a space where more people, more competition can happen, because if you have more people, definitely more competition. But I am not, holding my breath for it. Yeah.
So it's more like a double-edged sword. It could be beneficial and
It could be. I mean, right now we're actually, one of the things that's happening is in Africa, Africa is experiencing the largest growth in hospitality. Right. Hotels that are being built, most of them are being built in Africa now, right? Because there's just land everywhere, right? And there's the need. But outside of that, that's good for the investors. Right. But for the masses, some of these people can't even afford it. So it's really the people that are coming in, expatriates, travelers, that are going to be using these spaces anyways. So, yeah.
Just to go back a little bit, tell us about your background and how you found yourself in.
I don't know. I just I just got here. Okay, so background. How far do you want me to go? Like childhood. Okay, so I studied psychology in school. first
Right.
degree, Covenant University. Shout out to all the Eagles out there. I did that and then went to work. Worked in the financial services industry for a few years. Then went back to school, LBS, did a full-time MBA program. That's where I met my partners now. So we're classmates. And that's where this whole entrepreneurship journey started. It's like, oh, you know what? It's a good idea for us to sort of close the gap in credit and whatever is happening there. Oh, yeah, let's do that. Okay. Before we know it, we have registered business. Before we know it, we're co-founders. So that's how it started. I don't know if I made it too summarized or do you want me to
No, no,
elaborate
it's
a little
fine.
more?
It's
Okay.
fine. So that's Sycamore, right?
Sycamore. Then 3 years into that, I guess because I in particular, amongst the three of us, had been in the industry the longest. Um, I was, after setting up the structure that the business will run on, I think it just became routine for me because how much real innovation can you really do in the lend tech space, right? You're lending to people, you're collecting, you want to be maybe faster with your service delivery, you want to maybe be more efficient in how the integrations work, that's good. But in terms of um, how people interact with each other and the essence of the business, not much was really happening. So I guess we got an opportunity. Hey, you know what? We're getting this space. We have surplus space. Why don't we go into this short-let business? I'm like, oh, okay, not bad. I've always had an itch to scratch with real estate, property,
Right.
hospitality area, right? And so when that came, my ears just popped up. How do you say? Okay, let's do it. Like, and we had the space anyways. We had paid the rent, so why not? My thing is, for any business I'm going into, anything I'm doing actually is, if I fail, I'm okay. I would pick myself up and I would still be okay. So I wasn't shy to just say, okay, let's try this. I was still like a bit hesitant for 6 months. The place just stayed bare. Like I wasn't moving on it. They're like, okay, you know what? Rent is almost due again. How far? Maybe we should flog this. So we did set it up. We set up three 4-bed apartments, and the first guest in one of the beds took for 1 year. I'm like, this is moving on. Okay, let's see. So that was our first residence, and then we took on a second residence, a third, fourth, launching our fifth and sixth this quarter.
Right, amazing. Why I decided that we shouldn't pick only one industry is so that we could contextualize what being a business owner looks like in today's world. Because most times we really don't stick to one business,
Yes,
right? We try,
diversification.
yeah, we always diversify. And but what were some of the opportunities that you saw that signaled that this is what we should be doing, even starting from Sycamore, from financial services space? Because you could have come out of LBS and chosen any business.
I'm going to get a job.
Right.
So I think one of the signals was the space was just blossoming, maybe not maturing, but just blossoming. A lot of players. At some point, we have over 300 digital players in financial, just lenders. They're not banks. Do you know what I mean? So there are a lot of, it's a highly fragmented market. But before it became this, there was the big trees in the forest. There was Ren, there was Page, there was now Z Vans. There were just a few of them that are noticeable, right? And they were still not scratching the surface. A lot of credit was still required. We had done this case in school, and I think it just opened a few people's eyes. Like, we can do this. You'd have to also imagine the risks that you take on for collecting other people's money, giving it to other people, and then in the middle you're there taking all the risks both sides. So there's still a lot of space to capture.
What year was this?
We registered the business 2018, and then we started operations in 2019.
Okay.
So we celebrated 7 years this year.
Wow.
Feels like a lot more, but yeah. So that for hospitality, it was literally opportunity, and then we just said, okay, looking good, and then we've learned along the way. So I didn't come in there with any experience, unlike Sycamore.
Right.
But no experience required. You learn on the job,
Right.
and because there are some skills that are transferable, right? If you're setting up a structure, you need sales. I've done that before. You need accounts department or finance department. You need all these departments. It's just that the meat of what they're doing is sort of different. So
Yeah. Do you have any idea what the market size looks like?
for
Financial services.
ah at the time when we did an IFC, we were working with an IFC study for 2017, I think, and it was over 300 billion in dollars, the gap in Africa, right? And when we came in, we said, you know what, we just want 2.5 billion of that every
Right.
year. And we have been able to capture a significant portion, especially in the last few years, because we have been more out there telling people what we're doing. So it's really a platform where as much money as you get in, you can then help others with
Right.
that money, right? So
At the time, specifically at the time when you started, financial inclusion, there's so much conversation about financial inclusion. There was also conversation around limited credit data to be able to give
make
out these loans, to
decisions.
make decisions,
Yeah.
right? So how did you mitigate against that at the time, and by how much has it changed right now?
Oh, there's a lot of improvements right now. When we started, I think there were maybe two, three credit bureaus, and the information wasn't as reliable.
Right.
The thing is, you can only make decisions, quality decisions, if you have quality data. And sometimes you have outdated information about a certain customer, and then you're making a decision, and they're like, "What are you talking about? I've paid on this loan."
Yeah.
So we say, "Okay, go sort it out to your bank, get a letter of indebtedness, and come back." So you're sort of going round that system because it's not doing the work they're meant to do. But you're also teaching them that if you're not efficient, we don't need you, right? So there was a lot of sitting up in the last few years where more people came, more serious-minded people came. You're asking the banks and other financial institutions to send in information about people who are owing, so that other people, it's like a melting pot, right? The information that I get from First Banks, then all of those people, I'm able to use to make decisions. And then when they default on my part, or even if they perform, these people also are able to make decisions based on that customer. It's even better now because you have the global standing order, GSI, right? Where the government has said, if this person with this unique identification with BVN, right, comes to you, you can, and they owe you, and the thing that they want to run away, you can actually beckon on the other institutions where they have accounts to deduct,
Right.
And then, so people are being a little more circumspect about how they are spending and how they are interacting with credit. Because before, some people actually think credit is there, like it's like a grant.
Right.
When I take it, come and look for me. If you know my address, come and look for me. Because sometimes they'll give you we've dealt with that. Information, confirmation, right? So we would have to send people to go and verify this person's house. So all of that delays the time when we can actually give you the money. But the idea for fintechs is that we're more nimble and smarter, right? If the bank is taking a month to do a transaction, and then it could actually be more than a month, right?
Yeah.
We are saying we're doing it in hours. So we're taking more risk. So obviously we have to make decisions, we have to make it faster. We'll integrate with companies that can help us make decisions faster as well. So there is less bureaucracy in smaller FIs, financial institutions, which is how we can make better decisions, faster decisions, not necessarily better. We make better decisions because we are trying to integrate and diversify our data points to make informed decisions.
Right. Now that you've touched on risk a little bit, I would like us to just put it together with interest rate just for a little bit. So I know the difference between getting a bank loan and getting a loan from a lender like Sycamore, right?
Yeah.
I know that it's faster. I know that I can get it in 24 hours.
Less than.
But I know that it's more expensive
It is.
than a bank. So could you just...
If it's going to be fast, you're going to have to pay for the
Right.
speed, right? Because it's not the infrastructure is not doesn't come cheap.
Right.
Monies to smaller institutions don't come cheap because they know that you have the ability to negotiate higher returns. They are negotiating their own returns at the back. So we are dealing with lenders, we're dealing with the borrowers, right?
Right.
They're seeing how much you're lending, and they're like, I want a bigger chunk of that. How about that? So that sort of defines the rates at which you can lend. And then on the other side, for the guys that are borrowing, if we're saying we'll give you this money in 5 hours, 100 million in 5 hours, be ready to give us the documents that, but you get, be ready to take it at the rate. Because sometimes you can, if it's 100 million, you can wait for 2 weeks to get that 100 million. But it's the urgency to which you need the money that we're now saying, okay, you know what? If you need it urgently, you'd have to pay the cost of getting it urgently, I guess.
And also from the risk of potential defaults. I mean, how much verification can you do in 5 hours?
My sister, lending, businesses, and defaults, 5 and 6, right? So back end, you have to provision for loss.
Right.
But before you get to that point, and it's a far out point, before you get to that point, you have whole departments sitting on your case and just checking, this person, how did they look? Let me tell you one instance, right? And this was a long time ago. Before, and with every case, you get a little smarter.
Of course.
Right? You're learning how they're doing it, so you're not doing it. When it was still paper, before Sycamore, that's before Sycamore, right? When it was still paper trails and, go and bring this document, go and bring that document. He said, okay, chairman, go and bring, first of all, he first of all introduced himself as Mr. and said you're a banker. That's a red flag right there. Because bankers go by first names, if you know, right? So it was maybe not a red flag, it was like a burnt orange flag for me. So I just kept it in one hand. Go and bring your employment letter. This guy went to Oluwole or wherever back road he went to, forged a document that said he works in Stanbic. No dragging to you guys, please. I'm just saying, right? And on the letter, not even smart enough to even Google the Stanbic directors. It was Zenith Bank directors that were at the bottom of the letter. Unfortunately, the person that was studying this document used to work in Zenith. So it's like a mismatch right here. What's going on? And so, so there are very small things that will make you know, and these data points can also be psychoanalytic, because you're saying you live on the inside the hinterlands of Lagos, right? And you earn this much. You forged your statements, but we're not going to tell you that we're not stupid, okay? We're stupid. We don't know that you forged your statement, okay? So you earn this much, or your business is churning out this much, but you say this address. So we're going to check the address. If you indeed live there, we see how you live.
Right.
Do you understand? Sometimes it's not even that deep. Sometimes it's actually social media. If the US embassy is using social media to decide whether they're giving you loans, who are we not to? Right? So we're checking multiple data points depending on how you present. For businesses, it's even a little more tricky because we have to calculate. Okay, sometimes you see feast of famine, right? Sometimes you get a big contract and then for 2 months, no contract, but we have to average it out across board, right? And then see if that contract is a one-off thing, or do you get it every 2 months? Do you get those kind of things? So there's a lot of thinking in the period. There's also a lot of lessons that have been learned from multiple cases that we can apply very quickly. So there's psychosocial data points. There's actual information that you're presenting. There's how you present online. There are even the person that referred you to can actually be a factor in your approval, right? So a lot of data points to determine the risk. And sometimes you can ask for 100, reduce it to 50. Because we're like, okay, you can't, right now, based on what we see, you cannot afford to take this amount that you're asking for, even though I know that everybody in Nigeria is a big man and you don't even want to know the half of it. But, you have to be able to massage some egos and say, you know what, take this now, take another amount later. In 3 months' time, let's see how you perform on this amount, and then we can strengthen it, right?
So what indices go into the eventual interest rate that comes out? Is there like a, I don't know, national average rate?
So interesting because yes, there is the MPRs that CBN
Yeah.
comes out with every period, right? That's the amount that the bank can go below
Right.
to lend to us, because we take monies from everywhere, institutions, corporates, businesses,
Right.
and people. So if that is a fixed amount, it means that we can't go below that amount
Course.
to our investors. Now, a smart investor will leave the traditional vehicles and come to nimble fintechs, taking that risk. They're going to price the risk
Of
in,
course.
right? So it's usually a little more than what the regular banks will give for us to be able to get money. So that's the cost of funds. We're going to factor in the cost of doing business into that as well. Yeah. Cost of leaving the lights on, cost of the person that is analyzing your statements. All of these things go into it. Insurance for the facility too goes into it. So administration, insurance, all of these things are factored in, and then we come up with the average amount that we can give buckets of people. So if you're an individual, depending on where you work, depending on how often you get paid and how consistent your payment is, we are able to then sort of price in risk. There's also profiles that we see, and we see US Embassy or Canadian Embassy. We're not giving you that loan.
Why?
You want to jackpot with our money.
Oh, right. There's that.
Do you get? We
Yeah.
see gambling institutions will be a little more wary. Do you get? Because so there's a lot of data that your bank statements can tell us that people don't really know. And then when you try to hide it by maybe sweeping your salary account into another account, asking for that account as well, because we want to see where your money is going. It tells you a lot of stories.
Yeah. And if you could price in any way the default rates or maybe percentage of that go into bad debts, what would you put it at?
While I don't want to open our...
I know it's
the average that is acceptable by CBN is somewhere around 5% NPLs. That's non-performing loans.
Right.
So technically, we try to be around there.
And you are judged by the same standards as banks, as a larger financial institution.
So CBN sort of is the apex bank for commercial banks, for microfinance banks, and other FIs, right? So we have a microfinance bank license. Right. So definitely in that bucket.
The same. Okay. So, but how has regulation shaped both sides? So on one hand, policies, for example, having BVN has certainly made things easier than it would have been. You don't think so?
Well, to an extent.
It has because now there's a trail.
Yes. It has put a lot of order to an otherwise chaotic space. But let me give you an example of why I did that. When you think about how, you know how when election period, you hear that little children are voting. How did they get those? There's still leakages in the system, right? And so if little children and cows and all of those things can get voters card, right? Imagine that the BVN, this is not as rock solid as we expect it to be, or at least they're working towards making it even tighter, right? So I think that's also why we sort of combine it with NIN, so that we're sort of knowing this unique person that presents on this platform and this platform as the same person. So
collectively they do help.
Yes, collectively.
But what kind of limitations did the entire regulatory space and policies and all of that create starting it?
So different regimes and different, what will Musa not say at the gates, right? So we have, back in 2020, I think, there was a regulation around Okada ban. Just before then, we had invested in a product called Taxi Money. This was meant to be directed at road transport workers. What we're trying to do was go into the cash informal space and try and understand it to the point where we are able to lend to them. So obviously, you spend money to make money. We started to lend to them to start to learn how they behave, what patterns we're seeing, all of that. Then the ban came, and Okada parks, Korope parks, and Keke parks were wiped out.
Oh.
Right? And it just felt like, okay, that was the cost we had to pay for that product. And that product died a natural death. And because you can't get them in associations and as a collective anymore, it doesn't make any sense. An Okada guy can't come and get a loan from us just directly like that, right? It's a tedious process for him. Recent developments around the recapitalization, we've had to say, okay, we came into the market and our fund managers license capitalization was about 150 million. And then this year they're saying it's 2 billion. So you have to go and look for that money to make sure that, your license is not revoked. So while there's good that it does in terms of ensuring that you are a very rock solid financial institution, it also puts pressure on the business because before that regulation, we weren't thinking about that. Right. So now we have to then think about this as well as leaving the lights on and making sure that our clients are served. So you can't work a business outside of the political, geopolitical environment. So you just have to roll with the punches, right?
Okay, so just to move more into the hospitality a little bit more.
Sure.
What figure here signals the opportunity? What's the market size and potential in Nigeria?
So the estimated revenue that came in last year for shortlets as non-hotel hospitality institutions was about 280 million, billion naira, right? And this is just in 6 main areas. You have Lekki Peninsula, right? Further down, you have Ikoyi, VI, and then the upcoming Surulere, Aba areas, right? So these are, in terms of numbers, what we estimate to make this year, obviously, will be north of that number.
Right.
But, you can't speak for all of Nigeria because it's not the same. There are different factors and security factors and the likes that affect hospitality and the attractiveness of travel and tours in different areas of Nigeria. Let's not be specific. Right. Yeah.
So what do you think about the hospitality sector in Nigeria in general? So for example, there are conversations about how, quality, care, all of those things are not particularly our watchwords around here. Are they wrong? They could be wrong. We could all be wrong.
No, I mean, majority saying the same thing. How can they be wrong, right? Because of how the shortlets, industry started. People started it as a side business. Oh, I have this apartment. Okay, let's just do an Airbnb, right? What the trend is showing now is that people are moving or preferring success in this industry looks more like organization, professional services in shortlets. So companies that are more organized around their services, verified apartments, these are what most people are now trending towards. You see investors actually investing in whole buildings that are run by a company, not just an individual. Just see what I mean? So the majority of people can be wrong. There is a quality factor that, is white. I mean, we don't have a real maintenance culture in Nigeria if you look around, right? But we try to make sure that there's responsiveness in there and our level of professionalism in terms of service is top notch.
So what are the specific factors or differentiating factors for Bedrock Residences compared to the rest of the
I'm happy to delve in. Okay. So for Bedrock Residences, so just as to capture the context of it, right? We started as a one residence company, and then now we have 4. Oh, sorry, I keep leaving out the new ones that are coming up because they're still very new in my mind. So 6, right? And what we've seen is obviously your costs go up in terms of where the economies of scale are not economy in anymore.
Right.
Where so I was saying earlier that our CRM, well, hospitality management system, is Indian, right? Support is across the sea. Time difference, language barriers. These are factors that sort of affect our own service, right? So, and then the cost, it's billed in dollars. So we're like, what's the point of making all this money and then shipping it abroad because there's no local solution that's commercialized, right? And so what we've done is we've built a homegrown solution that is built in Naira and is specific for non-hotel organizations. Well, hotels can use it too.
Built it internally
Built
yourself?
it internally, yes. So we're going to market this quarter, and that's something that's come out of running the business for 4 years, right? There's also, so that's on the like software side. We have different packages where it can come with a website or web app and a channel management system so that you can plug into Airbnb, you can plug into different OTAs that can funnel businesses to you. So that's something we've done. We've also seen that the wider hospitality industry sort of captures people and how they travel, right? So we're integrating into travel and tours and saying, okay, if we can take care of you the length of your journey, so from your bookings, organizing the holiday for you, where you stay in different areas of Lagos and outside of Lagos, partnerships like that. These are the things that we're thinking about, not just a collection of shortlets anymore. Now it's a bigger dynamic to it.
So you're covering the full extent of the value chain as much?
Yes, pretty much. Making mistakes on the way.
Yeah, because that sounds like there's a lot of manpower, there's a lot of overhead expense. What are the challenges that you faced in hospitality?
Energy. Look, because we're so capital intensive, right? You're saying come and stay in a physical place where people are going virtual for work, right? So you're managing rising cost of energy. Last month, the grid fell, and diesel was especially expensive. So that double whammy hit us like a brick. There is, yes, you have people who have to do, this, one of our core values is excellent service, and it's people that deliver excellent service. So you have to have people. You have to train people. You have to ensure that they're not seeing themselves as just we're front desk. It's small, and they have to own the essence. Yes, they have to care. Because you meet all sorts of people. I was trying to, explain earlier when we were discussing with Buddy that the people that if you see them as a statistic when they come through your door, you're probably not going to be a choice for them next time. When you see people, somebody's coming to a family unit, they come with children, how do you then contextualize them in that, for their needs? Someone is traveling, maybe solo traveler, she's pregnant. How do you ensure that she's cared for? So that, so beyond just thinking about 10 people are staying with us, we're thinking about their security. During the later part of the years, people are more security conscious because there's a lot of movement. So we're intensifying on that end too, where we sort of integrate with the national Nigerian police to say, oh, hey, look, if anything, look, you guys should be with us, right? So there's a lot of things that go into running a collection of these things professionally. And overheads are one of them. They're one of them. If Eco Hotel can come out and complain about energy, who are we? Who are we? And the thing is, because you're now sort of decentralized, because we're not running one huge facility, we're running multiple facilities around different areas in Lagos. It can be, because you're dealing with band A here, dealing with band B here, it can be very, very hectic, but it's worth it.
Yeah, so I know you said 6 residences, but how many shortlets?
So we call the buildings that the apartments are in
Right.
residences.
Yeah.
So one of them has, we started with, well, three. One has 7, another has 18, one has 20 something, another has 6, another 2, 1, like that. So it's sort of distributed unevenly.
Right. So what's occupancy rate like, particularly when there's no tourism involved, when we don't have Detty December?
You're hopeful for an average between 65 and 70. 70 will be impressive,
Okay.
right? Because you would hope that 100 is what I'll say, but
Right.
there's some days that the rooms will be empty. And for good reason, you need to be able to air it out, deep clean, all of that good stuff for the next guest. So the average expectation for occupancy, we hope, is 65. So, and that's across the year. So if you're doing high 90s slash 100 in December, then in the slower parts of the year, you can sort of make up for that number. You have periods where it's like non-festive, where perhaps they're fasting. We just came out of a fast, and Christians and Muslims, double whammy
Yeah.
again. So nobody's celebrating, nobody's doing anything. They're just being pious and, but you see an upsurge when people then come out. It's Eid or it's Easter. Those numbers go up with festivities.
What's the advice you have for someone who wants to start with one shotlet? So from your model, I can see there are economies of scale.
Yeah.
Right. So you would be able to mitigate on
Yeah.
something else. But someone starting with just one shotlet or two, is it still the same profits?
2 better than 1.
Right.
The reason why I say that is because once someone takes your apartment, the commitment to that person is that you're going to free that apartment for them for the period that they are booking.
Yeah.
If someone else comes and wants to give you a more profitable deal when it's a longer term, you can't take it in that same period because once it's occupied. So if you have 2, it's better for you. You can sort of switch things up. The same generator that will carry one apartment will likely carry the second one as well. The same person that would be hosting the guests in one can manage 2. So that's why I said 2 is better than 1. And you were right with saying the economies of scale. But there's a point where those economies don't scale further than a certain period. So you just need to see how that works for you. If you have something and you're trying to do it on the side, I'd rather you maybe hand it over to a property management company that can maybe funnel guests to you, manage the place, and ensure that you get your money at the end. There are companies like that now. At the end of a certain period, you can say monthly or quarterly or annually, Oh, yeah.
Yeah. So would you say like tourism is has a direct impact? I mean, it clearly has a direct impact.
Yes, it does.
Broadly speaking, so for example, you think of a country or a city like Paris, and you know that it's tourism all year. If Nigeria or if Lagos specifically invested a lot more in tourism, do you think it's something that would over time increase the overall cost for everybody, and so it's not much of a gain? I don't know if you get the kind of question I'm asking.
No, I do. I understand it. I think that if the government invests in tourism, it's a good thing. It's a good thing because there's so much that we can be proud of in Nigeria that we're just not paying attention to. Because when you travel, you see, is this all? This place now, the Eiffel Tower, that's it. Meanwhile, they've done so many, the restaurants in the tower, there are shops that you can get like little bits of stuff that are nothing really, right? So they're collecting your money at every turn. There are countries where you go to one place and if you're the citizen, you pay less than someone that is a tourist. If the government was intentional about investing, it would be good for the economy in general. Businesses will rise out of it. You have 1 out of every 5 business that is surviving, their 5th birthday, right? So businesses are dying every day. So if we have a way to generate more business, that's a good thing for the economy because small businesses are the bedrock of the economy in Nigeria. Bedrock, pun intended. So yeah, it'd be a good thing. How it would affect us in terms of hospitality, people need a place to stay. If money is coming in, if somebody's coming from Paris as opposed to from Nigeria, coming from Paris to Nigeria, they will come and spend their euros here. They would stay somewhere, they would eat our local dishes, they would enter transport, they would spend money. Sometimes you would even see people saying, oh, send me more money because it's really happening here. Or I want to go shopping. Or people are doing this thing where influencers online are doing like hauls, shopping hauls from Nigeria and taking it back and saying, oh, see what I bought from Nigeria, this and that and the other. So if the government did um, invest a fraction of what we're seeing today, there'll be a boom in the industry for hotels, shotlets, for small businesses that provide auxiliary services around, and just for the economy in general.
So where I'm even trying to land it is, how does that inflation now affect the everyday person? Because now what happens is that as Detty December starts, cost of transportation is high, cost of shortlets is high. So for those of us who are nestled in Nigeria, what does this, is this even any beneficial to us, or they should leave Lagos for us?
So you said if the government, your previous question was if the government invested.
Right.
It would be across Nigeria, because I think that in Lagos there's only so much you can invest in. So if they take the attention outside of Lagos, that it then doesn't put the burden of inflation only on Lagos. So you see how traffic was a jam.
Right.
Now, not music. This time it was a jam in December. I didn't go out because I'm just like, what the hell is this, right? So it will reduce the impact on the amenities that we don't even have that are working
In Lagos.
in Lagos, and push those pressures outside of Lagos, Uyo, Abuja, Port Harcourt, Ibadan. It will push, and then it would also then bring more money into the economy for them, because yes, inflation will go up, things will go up, but you make more money. Ojoro Council.
Yeah.
So
you think the issue for the inflation is because the demand pressure on Lagos is so much? That's why.
well, I think so. I think it's a contributory factor. There are multiple things that contribute to the inflation in general. But yes, demand is one of them.
Okay. So, what advice would you have for someone in the hospitality space? I mean, speak to the Nigerian hospitality space.
Um, there's room for more businesses, more professional businesses to come on board and to help us to create a perception to experts, to travelers, to people coming in, that Nigeria can be more than what it's portrayed to be. Yes, please come in, but with the intention of doing good work. Don't come into hospitality through shortlets and have it as a side business. You get burnt. You get burnt so
Yeah.
bad, right? People will run away with your money, and that's for a fact. People will damage your property. That's a fact. You will spend more than you make in terms of maintenance and all of that. The joy of serving should be one of the things that motivates you to come into the business, because if you're not trying to take care of people, then why are you in the business? You see what I mean? Like, you forfeit your family time, you forfeit the festive periods with just yourself. Just even taking care of yourself will be, a challenge. So don't come in if you don't have a heart for people and seeing them well and healthy and thriving. But yes, there's room. There's a lot of money to be made as well. So please come in. Let's do this together.
Yes. Make a random prediction about your industry. So, one for the fintech space and one for hospitality.
Okay, so I'll tie in your first question into this last one. You said, and it's very, verifiable, that Nigeria is going to be sort of the cradle of population in the world by 2050. So the trends are looking at people, just what can you do with people? How can you empower them to be part of the banking, being banked, not just trying to be banked or banked, right? So for financial services, it would be creating more dumbed down solutions. People don't need to download an app. there's an there's a there's a an overwhelming number of apps and just mega apps. So what I mean by that is those ones that do multiple services, right? So you have to think about what do people really need in bulk, and for people that don't have access to technology, to internet, sorry, as fast as Lagosians have. I think that a lot of people, when they're making predictions, they make predictions around what they see. But you have to think about the population in Taraba, for instance. How do they interact with this? You have to take characteristics of the personas there into your predictions. So, are these people enabled in terms of internet, smartphones? If these are the basic things for us to be able to even go further in the conversation. So dumb down solutions for financial services would be useful. Um, for hospitality, I think that specific to Lagos in term because this is the context with which I do business, right? Um, I think that there's the push to the mainland because land is cheaper there. Development is more affordable than it is here. There are many things that go for the mainland. Old houses are, people are just tired of being in the old houses that they inherited from their fathers. So they're selling to developers that are putting up structures. And these structures are mostly 2-1 studio apartments that can be used for shortlets or can be used as urban homes, right? So these are where things are going very verifiable with the land and planning. So obviously, if things are going that way, what it means is that there'll be less and less family homes. Yeah. There'll be less and less historical heritage homes, things like that, right? And more, I don't want to say barrack-like developments, but yeah, more that can contain or accommodate more people because there's only so much space in Lagos that we can build on. So that's
So maybe more skyscrapers.
it would be great if it were more skyscrapers that were planned, that right. Deliberate. Do your soil test, do the development in such a way that it is sustainable, right? It would be great. Let's just put it that way. But hopefully, our developers take the feedback around even the spacing of the apartments, the space for even windows. Let me even give you that example, right? For windows, you see old houses that they're tearing down, having multiple windows, having really large windows, or having courtyards where air can go in. But now we're relying more on ACs. So it's like, God help us. So the style of development, I mean, this is not a prediction at all. I'm just saying, right? The style of development is sort of going a way that we're forgetting that we're in the tropics. So hopefully they turn back and do better. But yeah.
Awesome. Thank you so much. This has been a very insightful time. I hope it was insightful for you as it was for me. Be sure to catch up on our previous episodes and leave a comment if this resonated with you. Thank you. Until next time. Bye.
Bye.